Hello everyone, this is B.S. Suranor, Assistant Professor of Commerce, Government First Grade College, Pachapur. So friends, today I am going to discuss an important topic under corporate accounting for Rani Chennamma University, Belagavi, third semester. So friends, under that the first unit, company final accounts. Under this chapter, in this session, I am going to discuss the meaning of final accounts and the explanation of vertical format of final accounts. So friends, in order to understand the meaning of company final accounts and the vertical format of final accounts, it is quite essential for all the students to have a background knowledge. The background knowledge required for this is the student should know the types of companies, formation of companies, maintenance of books of accounts, and need for maintaining books of accounts. So these things will be known by the student during his previous studies. Dear students, the learning objectives of this chapter covers to understand the meaning of company final accounts, to know the vertical format of final accounts of companies, to apply the steps in preparation of financial statements, to analyze the provisions relating to preparation of company final accounts, and to know the treatment of managerial remuneration, provision for taxation, and dividend. Dear students, it is very important to know what you will get by this session. So through this session, you will know the meaning and format of statement of assets and liabilities. You will know the format of the statement of profit and loss. All the students will understand provisions relating to dividend, managerial remuneration, and provision for taxation. Students will be able to prepare the financial statements of the company with notes, and it also helps to enhance the practical knowledge of the students. Dear students, now we'll have some introduction related to this chapter. The final accounts are prepared to know the financial results of a company, to communicate with the different parties, and to analyze operations and performance of the company for further plans. The important uses of financial information covers management or the board of directors, shareholders, creditors, banks, government, investors, financial analysts. These peoples will take the proper decisions based on the informations disclosed in final accounts. My dear students, now I would like to throw some light on the meaning of company final accounts. Final accounts are the accounts prepared for the purpose of presenting a periodical report of financial operations, position and performance of company through statement of profit and loss and statement of assets and liabilities. Dear friends, there are two components of final accounts which are to be discussed in this session. One component of the company final account is income statement, or it's also called as a profit and loss account, and another component is statement of assets and liabilities, or it is also be traditionally called as balance sheet. Now let us learn the meaning of statement of assets and liabilities. The statement of assets and liabilities is a financial statement which reports the assets owned by the company and the claims of the creditors and owners against these assets. It is prepared on a particular date. And likewise, the meaning of statement of profit and loss. The statement of profit and loss is a statement prepared to ascertain the operational result of the company. It is a statement of revenues earned and expenses incurred for earning that revenue. It is prepared for a particular period. Dear friends, In order to get the financial results or in order to know the financial performance of the company, it is essential to understand the format of assets and liabilities and the format of profit and loss. So first of all, I would like to throw a light on the format of assets and liabilities. The assets and liabilities statement will be prepared in this form, that is as per schedule 3 part 1 of Companies Act 2013 had mentioned or it had made mandatory to maintain the vertical form of balance sheet, and the format is like this. So first of all, the balance sheet has to be divided in two parts. The first part is equity and liabilities. Under this equity and liabilities, we have four components. Of that, the first component is shareholders funds. The shareholders funds covers three important items. One is share capital, the second one is reserves and surplus, third one is money received against share warrants. About the share capital, you know very well that the equity share capital and preference share capital, two things covers under this. And as far as reserve and surpluses are concerned, this is nothing but the profit and loss statement information will be in this section. And another one important here is the money received against share warrants. And the second component under the equity and liability is share application money pending allotment. Sometimes the share application money will be received by the company, but it is pending for allotment purpose. Such amount is to be taken under this head. Difference. The third component here is non-current liabilities, which covers four important subcomponents. One is long-term borrowings. The long-term borrowings are the borrowings which are not settled within a period of 12 months. Such things are to be taken here. The next is the deferred tax liabilities. It is net. It means we have to subtract if there is any amount of deferred tax assets, then the balance is to be taken in this section. And another component here is other long-term liabilities. So other long-term liabilities are other than borrowings. So if there is any long-term liabilities which are not settled within a period of 12 months, that is to be taken here. And if there is any long-term provisions, those are to be taken under the head non-current liabilities. And the fourth important component under the equities and liabilities is current liabilities. Here we have four important subsections. One is short-term borrowings. This item covers the borrowings which are to be settled within a period of 12 months. And the next is trade payables. It's nothing but the creditors and the bills payable. And another component here is the other current liabilities and short-term provisions, and the total of all these are to be taken as a total equity and liabilities, which should be tallied with the total assets which are to be taken in the next thing. The second part of the statement of assets and liabilities covers the assets. The assets are to be divided in two components. First component here is the non-current assets. Under this we have the fixed assets. Fixed assets had again four important subcomponents. One is tangible assets, for example the plant and machinery, building, like furniture and fixtures. Likewise intangible assets, which covers the patents, copyrights, goodwill, like that. And capital work in progress and intangible assets under development are also be taken under the fixed assets head. The next subcomponent here is the non-current investments, deferred tax assets, long-term loans and advances, and other non-current assets, if any, those are to be taken under these heads. And the second part of the assets here is the current assets. The current assets covers the current investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, and other current assets. Usually the current assets are the assets which are to be settled within a period of 12 months, and the total of non-current assets and the current assets are to be taken as the total of assets, and these total assets are always equals to total of equities and liabilities. And these the statement of assets and liabilities are to be prepared with the support of the notes to statement of assets and liabilities, which notes will be discussed in the later periods. As like statement of assets and liabilities, we also need to prepare the statement of profit and loss. And the statement of profit and loss of a company are to be prepared based on the Schedule 3 Part 2 of Companies Act 2013, which makes all the companies are mandatorily to be prepared these statement of profit and loss as per the vertical form. And this statement of profit and loss account covers two important parts. The one part is continuing operations and another part is discontinuing operations. The continuing operations are to be computed through various stages. Of that, first of all, we have to take income part. The income part covers two important items. One is revenue from operations. Revenue from operations are nothing but the income or revenue which are received by the company by sale of goods and services. Such amount is to be taken here. And other incomes are nothing but the incomes or the revenue which are received by the company other than operations. And the total of these two heads are to be summed up, and that is called as total revenue, and we can quote it as A. And from this total revenue we have to subtract the expenses related to the company operations. And of that expenses, one is cost of materials consumed, then second one is purchase of stock in trade, and the next one is changes in inventories. Likewise, employees benefit expenses, finance costs like interest on debentures, interest on borrowings, like that, and depreciation, if there is any depreciation on fixed assets, and amortization expenses, those are to be taken here. And if there is any other expenses are also to be taken under this head. And by making total of all these, we have to sum it up it as total expenses, and we can quote it as a B. And by subtracting this B from A, that is by subtracting the total expenses from the total revenue, we will get profit before exceptional items and extraordinary items and tax. Then from this we have to deduct exceptional items. Then we will get profit before extraordinary items and tax. Then that is to be quoted like this: E is equal to C minus D. Then after this we have to deduct extraordinary items, if any, and then we will get profit before tax. And from this profit before tax, if we deduct tax expenses, the tax expenses had two components. One is current tax expense and another is deferred tax expense. So these two are to be combined, and that is to be deducted from profit before tax, and then we will get profit after tax from continuing operations. My dear friends, if there is any discontinuing operations, then that is also to be considered for computing the income. So for that purpose, we have profit on discontinuing operations. And if there is any tax on discontinuing operations, that is to be subtracted, and whatever the balance remains, that balance is called as income from discontinuing operations. And the total of continuing operations, there is income from continuing operations, and the income from discontinuing operations is called here as total profit for the year. And after getting the total profit for the year, we will get the equity per share. Earning per equity share can be computed in two categories. One is the basic and another is diluted. So this is what the overview or the overall procedure.